So over the weekend, guys, I've been thinking about another scenario to this wave structure because if on the Qs we are contemplating the idea that this was the low of the correction, okay, then why not on the SPY? So what we're gonna do here in this video today, guys, is that we're gonna review that version of the wave structure because I was thinking about it over the weekend and I couldn't really sleep on it. But so I decided to work on it, and so let's take a quick look, right? So before we dive into the analysis, consider subscribing to the channel, give this video a thumbs up, and thank you so much. So the main count has always been the same, guys. If you guys remember from our previous videos, right, we were looking at this as an A, B, and C to the wave 4. And then this is the 1, the 2, the 3, and then triangle, okay, in the fourth wave. Okay, 1, 2, 3, and 4, and then we're going to wait for the wave 5. Okay, this plays out correctly in that coming Wednesday, okay, a couple of days from today, we are anticipating the meeting minutes from the Federal Reserve FOMC event that occurred a couple of weeks ago. And that event is going to let us know a little bit more as to what the Fed is really planning on doing, which is, the market has been pricing that in. But what we got that, a couple of weeks ago on the press conference and that the release, those notes were just kind of like the broad concept. All right, the meeting minutes is going to let us know in detail what exactly they're planning on doing. So that is going to give some sort of direction, whether it's up or down, to this market. So for that reason, the main structure, the main count, let me just turn this on so we can review. For that reason, this main structure remains valid to me, right? Because till we get to that day, we're going to trade sideways before we actually decide a direction, and we either head on higher or we break the trend and the pattern and we break this low. So that's why I was really breaking my head over the weekend to be like, damn, there's got to be another version of this count that is still suggesting upside, that is still suggesting bullishness, and what could that be? So let's quickly touch base on this one. I'm going to review the alt count, which is the bearish count, and then I'm going to get you guys to that version that I was looking at. Okay, so this structure is still suggesting that the wave 3 right here on January the 4th completed. We then got the ABC to the W, X, ABC to the Y of wave 4 here on February the 24th, which, guys, look, came into an appropriate 38.2% retracement, or 412.71. We then bounced into the wave 1, made a new high here, ABC to the 2, 3, consolidation, and then 4. Now, these two pairs, this wave 2 and this wave 4, are displaying guideline of alternation. If this is that if this is the structure, right, and this is the pattern, when this plays out, we must remain north of the wave 1 high in this consolidation, and then we go now, right? So this will be valid once we break above this high here, and it will be invalidated once we break the low of wave A. And then last but not least, will be thrown out to the garbage if we break this high. Okay, so keep that in mind. 440.96 is a must-hold zone for this structure, okay, for this consolidation to unfold at the 23.6% retracement, for then us to head on higher. And to confirm it, we must break above March the 30th high, and we must remain north of this wave A on April the 1st. Okay, guys, so you got 3 levels to watch for. Zone number 1 for confirmation, first level of warning, and then third level of warning, which is the wave 1 high here. Okay, guys, so 462 for confirmation, 449 for first warning, and invalidation at 440.96. Okay, guys, so let's take a quick look at the alternate version, which is the bearish count. That will suggest once we break this low, what happens? I mean, this high. So I'm going to turn this off, and I'm going to turn on our alternate version count number 2. And this count is suggesting that we are still in a correction in the wave 4. So from our January high, 1, 2, 3, 4, and 5 to the A, B, C, right? We're looking for the wave C, which came into a rejection, a resistance zone at the 786, 463, 786, 461, and 1618 or 465. Now, 3 levels of trend resistance. What do I mean by that? We have the orange count, which is this lesser degree. We have the green count, which is the intermediate degree, and then we have the blue count, which is the minor degree. 3 levels of trend, 3 degrees in wave counts. So that's pretty strong. Okay. To add to that, the 786 is a pretty good resistance area for a wave B pullback. Okay, so this whole thing is correcting this decline. Again, the wave B pullback to a 786 corrects the rally for the wave A. So that's one thing that I kept an eye on, and that was giving me a bit of nervousness, right? If that's a word. So now this, should we break the high of wave 1 in our bullish count, right? So I'm gonna turn this on and off, right? The main count, that's wave 1, this is wave A. In the bullish count, should we continue on lower, okay, then that triggers this count, and that's what we're gonna start looking at. Okay, so levels to watch here: resistance 465, 463, 461. Support that must hold 440.69 in the bullish count. For you bears out there, look for a confirmation or break south of 440.69. Now, here's what you guys will be waiting for. I'm gonna turn this off, and we're gonna consider the alternate version of this. Now, bear with me, because there's not much change from our previous version. Our previous version suggested that the wave 4 completed on February the 24th, but now here we're considering it to be March the 8th, just like in the Qs. And just like I reviewed earlier in the video, look, if this is the end of the cycle because we are potentially gearing up for the next leg up, then that means that the Qs, meaning the NASDAQ 100 and the SPY or S&P 500 should pair up to end the cycle together. Okay, so this count will suggest an ABC, a complex correction. Unlike the main count, this is just an ABC, right? Oh, sorry. They're both still a complex correction, but this one is considering the end here on February the 24th. My bad. So 3 waves down, 3 waves up, and then 3 waves down for a C wave to truncate before making new low on the wave A. Okay, same deal. This is still valid, but it's forcing it just a bit. Okay, forcing it just a bit. So you see, these are still the same characteristics, and this is why Elliott wave is a bit of a good tool, but also your demise, right? So we were having trouble understanding and accepting the fact that this was going to be a wave 2, all right, or here, because of how deep it corrected. Now I'm accepting the fact that this is also wave 2 when it's almost damn near 100% of the wave 1. Very subjective, I do say, but not invalid. And this wave 4 is not technically pairing up to this wave 2. Again, not invalid, still correct, right, from a Elliott standpoint. So this is the case where this is the 1, 2, 3, 4, 5 completed the intermediate degree wave 1, and now we're trending to the wave B. This instance could allow for a break below this zone. Okay, that's why I wanted to make this wave structure, because this will allow for a breach of that invalidation level in the main count. Now, how do we invalidate this count? This is where it becomes tricky, because if we continue on lower, right, and we break south of the zone of the origin of wave 1, I mean, we still have a long ways to go. Then that's when this count becomes invalid. But put this in the back of your pocket. Don't really rely on this one, but just bear that this might be the case. Okay, so sorry that I kept you guys a little long on the SPY, but it's just I had to show you this one. All right, so I do apologize. Take a deep breath. Let's take a break for a second. Not just kidding. Let's keep on going, guys. Get pumped, because market's about to give you one last opportunity to jump on board, to be profitable before we actually potentially see that next big correction. So the Qs on this wave structure is suggesting complex correction. Support here at 318, 1, 2, 3, correcting in 4, then 5 of wave 1, ABC to the 2. So just as long as we remain north of 361.27 and 354, we should be good to go. So keep that in mind. We may see not a triangle in this case, but rather maybe a ABC. Who knows? We shall see. We shall wait come Wednesday, because that's when I do anticipate markets will start picking a direction. And then taking you to the old count, same deal. Now, if this one becomes a little bit more evident that we break above this high here, I don't think that that's the case for this wave structure anymore. So I'm guiding myself on the cues to let me know if this is going to be the case. If this is the case, then I am very excited, because that will sort of start invalidating this view. But for now, till we break that high, we're going to remain objective to this structure. Next is the SMH. Now, SMH is a little bit of worrisome to me, because this is A, B, and C. I mean, I don't want to see, maybe this is going to fill this gap in the wave C or wave 2. Maybe not, but I don't want it to break below 259.91. So keep that in mind. If we start breaking south of 259.91, then we have no choice but to start looking at the 618, the golden pocket or the golden ratio. And that's probably where price action is going to head anyway, because if we take the high, an extension from the high to the low, maybe we keep on going higher, right, in the wave B, because right now this is 1, 2, and then another third wave up to the wave C. All right, then equality comes in towards that zone. Okay, assuming that that's going to be the case. I mean, let's take a quick look, right? We take an extension, sorry, a retracement, looking for the 50%, then, or the 618, that will get us to this zone. But if this is A, B, and C, then equality comes in at the 618, 100. Yeah, so potentially we continue to see price action continue to the upside to 275 before we are actually met with some sort of resistance somewhere here, right? A, B, and C, and then we go down for wave C of 2 to find equality of wave 1 versus wave B. Okay, guys? So keep that in mind. Downside support 252 to the $254 region. And last but not least, IWM. At this point in time, IWM, all I care for is for this thing to break above 211 and 208. Okay, guys? Why do I say that? Because that is major support, or it was major support from January the 14th of 2021 till we broke below it on January the 19th, of 2022. So a whole year cycle of correcting. Now we're breaking lower. Are we going to retest the resistance and then break lower, or are we going to retest it to the upside, find the support, and then we go? That is yet to be seen, and we shall find out. Okay, guys, so thank you so much for tuning in. I hope you guys had a great weekend. Sorry for the extended video. Sorry for the confusion, but it had to be shown. Take good care of yourself. See you guys tomorrow. Take care.